Hey traders, Raghee here. Welcome to Charts and Coffee. Hope everyone's having a good Thursday morning. It's right there in front of me. Good Thursday morning. We are taking a look. I was actually looking at the Russell before we went live with the show to see what kind of mood that Russell was in. Yesterday, Russell sunk into, and it hasn't really exceeded the lows in any meaningful way, but the Russell sunk into the fairly moderate part of the volatility support that you see there with the gray zone of the daily price movement range indicator. So if you're ever curious, what's the typical price movement range that any symbol could experience session to session? That's what the daily price movement range does. So we're hovering just below the lows right now. I'd like to see the RTY start to catch a bid around 2250. Yesterday's low was 22.53.7. So we'll keep an eye on that one. I do like that one to the upside. It's a fairly fresh uptrend. So we think about what is the last index to join the uptrending party. The last one is the Russell. So hopefully we can just put the Russell leads thing to bed, because not only is it silly, it's just wrong. Remember, the S&P, the Nas have been roaring higher for months, if not pretty much the entire year, sans April. The Russell now is just getting to the point where regional banks are starting to break out, just like financials are helping the Dow power higher. When we see these major sectors, KRE for the Russell, XLF for the Dow break out, we're going to start to see movement. And that's what we've got. The uptrend that we have really vulnerably as of today. So today, I have an indicator at the bottom of my chart, and all its job is to do is to gauge momentum and trend, and then give me a color-coded read. That's it. So I'm not going to do all the calculations. I'm not looking at lines crisscrossing each other. I'm just looking at two colors, traffic light. So what I have here is bullish momentum since the 5th. So the indicator said, look, we're starting to organize with bullish momentum on the 5th. Now, the price chart still looked really neutral. You can see that there. So we're seeing, and I don't go on the first color. I need two colors in a row. So see there on the 5th, it was green on the 3rd, it was green on the 5th, and then it actually didn't break out until the 11th. So this is what I use to get an idea, a guide on which way we're most likely to move. Now, the same thing goes for the trend. That's the lower row. The trend was bullish on the 17th. Now it's bullish on the 18th, and until the 18th closes with that green color on that lower row, I don't quite have a trend, but clearly we have a lot of bullish momentum. So we'll be sticking with this, but it could be a rough go. Let me give you all a little bit of insight into some trade management, because look, if there is a holy grail to trading, it's on an indicator, mine included. It is position sizing and it is risk management. I get a lot of folks asking, Rog, how do you set about growing an account? And I think most people think, well, I need a new widget. I need a new something. And maybe sometimes that new tool is sometimes what's needed. What is that tool that's going to reveal, for example, momentum and trend? If you're lacking a tool that doesn't give you structure, it's kind of hard to trade, because strategy is dictated by the market structure. Okay, but let's say you've got a good collection of tools, you trust them, they work, but you're still having a hard time turning the corner. I will tell you, when I do see members, whether that's, in the rooms or at different events, that's always the challenge, consistency in account growth. And I'll say, do you really think it's an indicator that's on the other side of your success? And they'll kind of hem and haw and so, no, I like the indicators that I've got. I've got some great ones from Simpler. Awesome. So what's the challenge? It's usually stop loss placement. It's usually position sizing. It's usually how to scale an account. And those are things that really aren't all that sexy, are they? And so when folks ask me, Rog, structure dictates strategy. That's one way to do it. But really, what scales to account growth? It's understanding position sizing and risk management. I mention that because I might get stopped out of RTY here today. Could very well happen. As long as I understand where the validity of the trade is, as long as I understand what the allowable risk to account is, I have a chance to let other trades that I have open. By the way, notice I'm always going to, I realized this of myself. I'm always going to start with losses. I'm always going to start with trades that are struggling, because let's face it, everyone talks about winners, right? You'd swear half the traders out there have confetti falling out of their ceilings. Act like you've been there before. I love when traders start to get all excited about a win. Isn't that what we're supposed to do? Sure. So I don't get too crazy excited. We're in the NASDAQ too, but what good is that for me to talk about? Yeah, I bought the NASDAQ and it's winning. Right. Good for me. Right, Rog? Good for you. But what I want to make sure for those of you that are listening that might be trying to get better, maybe you're not struggling, but you realize you could be getting better, is it's probably a matter of the math, right? Sorry, not the NAS, the S&P. Sorry, the S&P. So it's not a matter, yeah, 6 of one, half dozen the other at this point. It's the S&P that we're in. So we've got long IWM calls. We've got long SPY calls. And by the way, I went with the SPY mainly because I want to be able to continue to benefit from what has been a lot of strength in the Dow. I know it's in a bad mood this morning, right? But remember where it closed yesterday. So while everything was pulling back, the Dow was still powering higher. So we'll definitely keep an eye on the Dow for an opportunity to get long. But oftentimes if the Dow doesn't pull back and you're not comfortable with the tech narrative in the NASDAQ, take a look at the S&P as a proxy. Yeah, bot's saying, wait a minute, we're in the S&P or the NAS. So we wanted to look at the NAS, which I'm glad we passed on, but we took the S&P as a proxy in many ways for both. All right, anyway. So at the end of the day, it's really, I would say, position sizing and risk management. So then the next question would be, yeah, what's the next thing that a lot of people overlook, thinking that a new secret squiggle, and I call my indicator the secret squiggle, so I'm making fun of myself. So what's the new secret squiggle that's going to change my life? It's not. Actually, the next part is good old-fashioned watch list building. So wait a minute, Ron, before we even get to the indicators or some specific option strategy or some specific way to get into futures or futures options, it's risk management and position sizing. Then it's watch list building. So what you trade is more important than how you trade it. That's so much of what we do here in Charts and Coffee. If you find the things that are in trends and you continue to engage the trend, the chances are that if something's moving higher and it pulls back, barring things like FOMC or earnings, for the most part, when things pull back to a level of support, that of course is going to be varying from trader to trader and time frame to time frame. That's the nuance of trading. But if you find things that are generally moving higher, and this is something we've talked about all year long in the mastery, in the Sector Secrets mastery, we've had uptrends in the S&P and the NAS all darn year. And I think I was talking about this yesterday in Charts and Coffee. Yesterday, all of a sudden, people are talking about inverted yield curves and whatever else they were yakking on about. And I'm thinking to myself, have you fools not been long? Not you all, them. Have you fools not been long the market all year long? You're talking about inverted yield curves now? This is the nonsense that goes out there in the broader averages. Just tell folks what's trending and tell them what a dip is. So keep that in mind. Sometimes it doesn't have to be that tough. If you have kids, and I would say under 10, it's really interesting to ask a child, tell them some basics. Oh, these candles are green and these candles are red and these are yellow and it means bullish and bearish and neutral or up, down, and sideways, however. And then say, what do you think this thing's going to do next? It's really interesting because they're not listening to television. They didn't read something and some conspiracy theory somewhere. They're just going to look at it and they're going to use their common sense. And sometimes that's a really great reality check. That needs to be an indicator. The 9-year-old who understands colors, right? So anyway, let's go ahead and take a look at crude, talk about trends and things that are moving. Sometimes trends will come and sometimes trends will go. And it's our job as traders to acknowledge that. The trend in the crude oil started on the 8th, continued until yesterday. Does this mean I'm bearish? Oh gosh, no. See this pink color? That's bearish, right? Look at the candles, red, that's bearish. Once we start to see green candles, that's at least showing some bullish participation. In other words, when folks are looking at this market, the participation is favoring the upside. Then the momentum goes bullish on the 24th, right? Then the trend goes bullish on the 8th. So I'm still okay with buying, but it's pretty volatile. However, what about now? This is something that hurts a lot of traders. Is it still bullish? Yes, but is it a trend? No. So this is where in that, and notice it's a real-time assessment. So notice in that adjustment from bullish momentum and bullish trend to neutral momentum, neutral trend, what's the difference? Am I still focused on the buy? Absolutely. But how am I going to buy? Off what level am I going to buy? What are my expectations for follow through? Those are basically the three things and the only three things that have to change. But if I don't have a real-time assessment of the participation of the momentum of the trend, and I can't day by day or candle by candle, because we can do this on a 1 hour, we can do this on a 5 minute. If I can't do that, I can't adjust quickly to that changing landscape. So question on gold. Yeah, question on gold. If I'm looking at gold there, so gold does not have a trend. Gold has surged higher, right? Which is very different. It's a momentum play, which is still great. You might say, Rag, how do we determine? Show me how you would determine a momentum play. Because if you can recognize what it looked like, then when you see it again, you can say, oh, okay, that's the setup. So on the second candle here, on the 8th of July, I have bullish momentum. I also have green and yellow candles. So I have bullish and neutral candles. Okay, they can't be red and buy. So now I'm starting to see bullish momentum. Now I'm also starting to see there's two automated levels here, the Darvis, one at 23.83.2 and one, and they're just automatically drawn. And I could even make them a little bit bigger so everyone can see them. So let's see. Let's make these a little bit bigger. Just a little bit. So once you know where those automated support and level resistance levels are, there we go. That's nice and bold. Okay, so then I have another level at 23.85.3. So notice I'm letting the automation of my indicators tell me now is the time to be bullish. The candles agree with that. And then I have some resistance levels saying, well, if this is momentum, that strategy is buy stops, buying as resistance levels are broken. And you can see we tested those two levels for about 3-4 sessions, and then finally on the 11th, up and away. Now, is it just the lines and secret squiggles? Of course not. This is where we also have to acknowledge expectations for rate cuts. You know, if we take a look at the rate cut expectation, it just took off like a kite, right? It just whoosh, it just took off. It caught some wind and boom, that thing is up at plus 90%. So rate cuts are now far more expected than they were. Well, that's going to be bullish to bonds. That's going to be bullish to gold. So in the backdrop of this bullish momentum organizing and those resistance levels breaking and that bullish participation starting to show the chance for follow through, that all kind of came to a head between the 5th and the 11th, all while still staying at or above the gray zone of the volatility support level. Awesome. What about now? Now we're in no man's land, gang. So here's what happens to a lot of traders, especially momentum traders. They think they missed a move, and they saw this move on the 11th, and they saw this move on the 16th and think, oh, we're going to keep moving higher. The move on the 11th is a completely different breakout because it's still near those two Darvis levels. The move on the 11th really was the third, if not fourth attempt at breaking those two Darvis levels, right? It's not just higher highs we're talking about. Those two Darvis levels were still in play from the 5th to the 11th. Now it's later in the game. There's another Darvis here, yes, but it's far later in the game, right? It's a higher resistance level that will need another group of traders to say, gosh, 24.57 is still a deal. And I think gold is going to go to this level and they'll be willing to come in. That is a very late momentum, is really just late. And late is wrong, just like early is wrong. So now we're in no man's land. What would we do next with gold? Down in here, 24.41. If we can get back down to about 24.41, maybe even a little bit more aggressively if you want to keep an eye on 24.55, 24.54 and a half for GLD calls or micro gold or calls on gold GC futures or GC itself. All right. That's the way we want to look at that. And yeah, I tend to go into a little summer school professor mode. And if you're thinking, Rog, yeah, I want to do some summer school. Come check out what we're doing in the Sector Secrets Mastery. We talk about yesterday, we went into about a 10, 12-minute discussion. So really bite-sized conversations that just cut to the heart of what the issue is. What's the difference between momentum and exhaustion trading? It's a style's difference, but what's the difference? How do we look at futures options? How do we measure when to get into a futures options? How much do they cost? What's the risk? These kinds of things that a lot of traders are saying, Rog, I want to slowly start to trade futures. There's a 3-step process, baby steps into trading something like futures. So, these are things that we tend to do July and August, and we're doing those a little bit every week, little bite-sized videos that I send out to members. So you can start to add to your skill set during summer, which I love. So while everyone else is kind of chilling by the pool, having a wine spritzer, we're getting ready and we're going to kick butt in September, especially if the rate cuts really start to, at that point on the 18th, we're going to have our first quarter point rate cut, very likely with rate cuts clear into probably April of next year based on the data that we have. So we took a look at gold. What about silver? Silver's a little different a scenario, but it's still at least bullish or neutral. So your breakout, take a look at your Darvis range. Your breakout was through about 31. Okay. Now, if you want to buy silver, and I'm not a big fan of silver, I'd rather trade copper or I'd rather trade gold. Silver is a funny little metal because it's kind of like copper. It has industrial application, but it's not really quite like gold either. So it's got a weird way of moving based on what copper does and gold does. But that said, yesterday's sell-off into the gray zone was a trigger, just like the sell-off into the gray zone on the 12th and the sell-off into the gray zone on the 5th were buys in that gray zone. We really want to see, if you're bullish in silver, you really want to see it stay above 31. But if you're long from the gray zone, 31 could at least be a level that you could maybe move to break even at and manage risk from, with the ambition to be up at the level around 31.30 to 31.50. But I'm not as big a fan of silver because it doesn't map as straight to real yields as, say, gold does. All right. Okay. Yesterday, we saw a lot of weakness in tech. What about Microsoft? Take a peek here. This is a mean reversion. So Microsoft has been very heavy. So you might say, Rog, is that a broken trend? Not yet. We've had a trend in Microsoft since the 20th. Today will be the second day that perhaps we might break the trend, but does that mean we're bearish? No. I will say, though, when I see something like Microsoft or Apple or NVIDIA, do yourself a favor. Part of watch list building, part of what we do in the mastery is saying, okay, Microsoft, why? Right? What is it about Microsoft that makes it better than other names in the NASDAQ? What is it about Microsoft that might make it a better name than other things, Microsoft in XLK? What is it about this stock that has a higher probability of follow through? I actually like Apple better. If I'm going to compare two stocks that are in a very similar place, I probably like Apple marginally better. NVIDIA, let's use that as an example, because these are the top 3 names in the XLK, the 3 of the 7 of the Magnificents. Right? I don't want to necessarily be too ambitious on NVIDIA. And this is where I might say, what's the next thing I could look at? Is it AMAT? Is it LRCX? Is it Taiwan Semi? Things like that. But for those of you that have been wondering, except for that red candle, which really is a turnoff, except for that, we're sitting at some Darvis support at 118. So, a lot of folks like looking at NVIDIA. Might be better off diluting the individual stock impact into earnings by looking at either a stock that's far better in an uptrend after earnings. I have no desire to play the lottery scratch off ticket noise of earnings, none at all. But if you're asking yourself, Rog, going into earnings and coming out of earnings, what are we looking at in something like Taiwan Semi? It was a trend into earnings. Your best trading behavior, right? Is it buying, say, 170, 135 with a move to 176? Is that it? Or is it looking 2 weeks, 3 weeks, 4 weeks, 5 weeks, up to 6 weeks out in the context of a trend and just buying any number one of about half a dozen dips before earnings. Look at the travel, 6 weeks, 4 weeks, 2 weeks before earning, that rally into earnings versus just that little bit of noise, which is just a binary, hope I'm right kind of trade. You're going to find far better success trading into the anticipation of earnings than that noise itself. All right, gang. So that's a wrap. Thank you as always. If you're looking for some summer school, you know where to find it. Come join us over at Sector Secrets Mastery. I will see you all tomorrow. Same time, same station, gang. Be good to each other.